So today we are doing the CIE Economics May-June 2022 Paper 1 Variant 2, the MCQs Variant 2 paper. So let's start. One says, which list has the most words that are most likely to relate to a positive statement than to a normative statement? A says, describe, better, should, value, emotion. These are more like normative statements, so this one is not the correct answer. B, it says bias, objective, art, opinion, tastes. Only most of them are normative kind of words that are used in normative statements. So C, contestable is motive, subjective, and moral. These are all still normative words used in normative statements. And D says actual, ethics, fact, was, testable. These sound more like words used in positive statements because positive statements are statements that are related to facts that are not opinions. So actual, ethics, fact, was, testable. These would seem like this is the correct answer. So D is our correct answer for 1. 2, it says, what is the main characteristic of a planned economy? Now, planned economy is an economy where the government owns most of the firms and they own most of the resources and they allocate most of the resources. Most of the decisions are taken by the government or the state. So it says, A, all goods and services are produced by privately owned firms. This is not correct because that is in a free market economy. They're asking about the planned economy. B, all goods and services are produced by state-owned firms. This one is correct, but let's see the other ones. C, privately owned firms produce private goods and state-owned firms produce public goods. This sounds like a mixed economy, so it's not the correct answer. Finally, the price mechanism allocates scarce resources through the actions of buyers and sellers. This is again a characteristic of a free market economy. So B is our correct option for 2. 3, it says an economy produces combinations of computers and food as shown on the diagram of a production possibility curve. So they've given us 4 points on this diagram, and they ask us that if all available resources were used, which 2 points on the PPC diagram show the maximum combinations of computers and food that the economy can produce? Now, Y and Z are not the maximum because Z is a point that is not on the production possibility curve, so it is inside the production possibility curve. So it indicates that some resources are unemployed, so it does not show the maximum combination of computer and food. And secondly, Y, it is outside of the production capability of a country, so at current, in the short term, the country cannot produce at Y. It can only produce at a point within the PPC or production possibility curve or on the PPC, which are W and X. So W and X are the possible options that allocates all resources, all available resources to the production of computers and food. So W and X are the points, and that is shown in A. So A is the answer for 3. 4 says 4 students have to complete a table showing the functions of money. Which student is correct? Now again, this function of money is not in the A's level from now onwards, and it is included in the A level as updated by the Cambridge in its syllabus. So but still, let's do it. A, medium of exchange, it is a function of money, it is a store of value, and it is a unit of account. So all 3 are correct. A is the correct option. 5, it says, in which situation is the price elasticity of supply for a product and most likely to be relatively low? Now, price elasticity of supply means how quickly, or it measures the responsiveness of the supply of a product to a change in its price. So let's see in which case will this supply be low, in which case will be the responsiveness of supply be low to an increase in price. A, it says demand for the product comes from a wide range of customers. In this case, the PES will be high because the target market is high and it will result in high PES value. B, it says producers in closely related industries can easily switch to making the product. This again increases the price elasticity of supply, making it more elastic. So this one is also incorrect. The PES will be high in this case because producers can easily switch to the industry and the production will increase easily. So it will result in high PES value. C, it says manufacture of the product requires highly skilled labor. This one is correct because uh, to enable the production of the good, highly skilled labor is required, which is first, it is expensive and it is difficult to mobilize them, or it is difficult to hire them because they are in limited quantity. So this makes the supply of the price elasticity of the supply more inelastic or lowers it in as indicated in the question. So C is correct option. D, it says the main raw material used in the production of the product is in abundant supply. If it is an abundant supply, production will go smoothly and PS will be a high value. So C is the correct answer for 5. 6. The diagram shows supply and demand for a good. If price increases from P1 to P2, what will happen to consumer surplus? Now, consumer surplus is the difference between what the consumer wants to pay and what he actually pays. So in this case, this will be the consumer surplus initially at P1. So they say that if price increases from P1 to P2, so they increase, what will happen to the consumer surplus? So they increase the price to P2, the consumer surplus will reduce to this point. So initially the consumer surplus was area A, B, E, and after P2 is imposed, it becomes just A. So let's see the answers. It falls from ABE to A. This is the correct option. 7, it says, what can be concluded about the roles of demand and supply in a free market? A, they allocate resources to the greatest needs. No, it is incorrect. B, they ensure that goods and services are distributed equally. Again, incorrect. In a free market, they're not distributed equally because they are only provided the goods to those who can afford it. So it is not equality. It does not result in equality. See, it says they are both significant in setting the market price. This is the correct option. And D, it says they ensure that everyone can benefit from the good or service provided. This is not correct because demand and supply, they result in a scenario in which those who can just afford it will buy it. So not everybody can benefit from those goods or services. So C is our correct option in this case. 8 says a firm has a successful advertising campaign for a good. Which combination shows the impact on demand or supply and the associated reason? So a firm has a successful advertising campaign. Now they're asking what is the effect on the demand or supply and what is the reason behind it. A, it says a leftward shift in the goods demand curve. Incorrect, because demand curve will shift to the right because advertising results in awareness about the product to increase, thus people will buy the product more and they will demand it more. So the demand curve has to shift rightwards or outwards. So leftward is incorrect, A is incorrect. B, a rightward shift in the goods supply curve as the advertising cost of the firm increases. Again, incorrect, because it will not result in a rightward shift in the supply curve. It will result if it does in a leftward shift in the supply curve because cost of production rises, so that would be the correct one, but they have said that it is a rightward shift in the supply curve, so it is incorrect. C, a rightward shift in the goods demand curve, correct. Reason, as successful advertising increases demand. This is the correct answer to our question. D, it says a leftward shift in the goods supply curve. There is a leftward shift, but what they have given the reason, as successful advertising enables firms to sell more. The reason is incorrect because they are saying that due to a successful advertising campaign, they can sell more, and they've said that there's a leftward shift. How can there be a leftward shift if they can sell more? There has to be a rightward shift. This reason is completely wrong. If they had said that the cost of production increases, that's why there's a leftward shift, then it would be correct. But in this case, C is our correct option because they've mentioned the correct reason and the correct result of this action. 9, it says what would be the most likely reason for a firm's decision to calculate the price elasticity of demand for its product. A, it says to provide retail statistics to the government. It is not generally the most likely reason, so it would be incorrect. And PED cannot provide statistics, it's just kind of estimates, so it's incorrect. B, to predict the change in its total revenue after it raises price. This one is the most correct option. C, to calculate the firm's competitive position. Now, PED does not help in calculating the competitive position on itself, and the firm generally does not calculate its competitive position based on the PED for the product, because that would be a lot inaccurate. For C, a better alternative would be to go and do market research and identify the amount of firms and their particular decisions in much more depth. PED is just an estimate, so it won't be a good option. D, to enable the firm to complete consumer satisfaction surveys, completely irrelevant. B is the correct answer because we can know what will be the effect on the revenue if we raise prices or we decrease prices. For example, if a PED for a product is greater than 1 or it is price elastic, then decreasing the price will increase the total revenue, and if the PED is smaller than 1, which is price inelastic, then increasing the price will increase the total revenue. So B is the correct answer for 9. 10, it says the cross elasticity of demand of good S with respect to the price of good P is plus 1.5, means they are substitutes, because substitutes have an XCD or cross elasticity of demand which is positive. Second, the cross elasticity of demand of good S with respect to good R is minus 1.5. Complements, negative cross elasticity for complements generally. Third, it says the cross elasticity of demand of good P with respect to the price of good R is minus 1.5. Again, P and R are complements. So what can be concluded about goods P, R, and S? A, S and P are complements. Incorrect. S and P are substitutes because they have positive XCD. B, S and P are complements. Again, wrong. C, S and P are substitutes and P and R are complements. This is the correct option, C. D says S and P are substitutes. Correct. R is an inferior good. How do we know that it is an inferior good? We cannot know by calculating the XCD. We can know whether a good is an inferior good, normal good, a necessity, essential good. We can know that by calculating the YED or the income elasticity of demand. So D is incorrect. C is the correct answer. Which combination of events is most likely to leave the demand for a normal good in the same position? A, it says a decrease in consumer incomes and an increase in the price of a substitute good. This is correct because a decrease in consumer incomes will decrease the demand for the good, and an increase in the price of a substitute good will increase the demand for the good, and resulting in demand to stay about the same. B, a decrease in consumer incomes and an increase in the price of the good. This will decrease the demand. Both of these scenarios or events will decrease the demand for the good, so it will not make it stay in the same position. C, it says an increase in consumer incomes and an increase in the price of a substitute good. This is incorrect because both these events will increase the demand for the good. D, it says an increase in consumer incomes and an increase in the price of the good. And an increase in consumer income will shift the demand curve of the product outwards, but increasing the price of the good will not result in a decreased demand for the good. It will just result in movement along the demand curve. So A is a more correct option because both of those shift the demand curve in opposite directions, resulting in the demand curve to stay about the same position. 12, it says what does not happen when price acts as a means to allocate resources. Price determines the supply of public goods. In this case, price does not act as a means to allocate resources because in public goods they are generally non-excludable, and so consumer do not necessarily have to pay for its consumption, so price cannot determine the supply of public goods. A is correct. B, it says price operates in the markets for both goods and factors of production. It is correct. C, price recognizes consumers' ability to pay rather than consumers' needs. Correct. D, price signals to producers which goods are most profitable because price tells them what is the profit margin that they have in different types of goods. So D is not correct because in D, price does act as a means to allocate resources, so A is our correct option. 13. Which statement about market disequilibrium is correct? Price is likely to change. That is absolutely correct. Because if there is an excess supply or excess demand, the price will either go up or go down depending on the situation. If there is an excess supply, the price will go down, and if there is an excess demand, the price will go up. So price is likely to change in a market disequilibrium, that is for sure. So A is correct. B, supply is equal to demand. That is when the market equilibrium is there. So that is not a case with market disequilibrium. So B is completely incorrect. C, the government must intervene. It is not necessary that a government has to intervene in a market disequilibrium. If it is a minimum price and the government has imposed it on agricultural goods to make the farmers' incomes about constant, in that case government will intervene and buy the excess supply. But in most cases government will not intervene in a market disequilibrium, so this is incorrect. D, there must be shortages. Not necessarily shortages, there can also be surpluses, which is excess supply. So A is the correct answer for 13 as well. 14. Which combination of tax changes is most likely to be regressive in a developed economy? A, increasing the rate of wealth tax and raising the rate of sales tax on luxury products. When we increase the rate of wealth tax, whether we increase the wealth tax, whether we decrease the wealth tax, it is not going to be regressive in nature. B, introducing a tax on owning property based on its sales value and increasing the rate of income tax. The tax which is based on its sales value would more likely to be progressive because that will generally increase with the sales value. And C, it says reducing the basic rate of income tax and increasing the duty on fuel. Now they say reducing the basic rate of income tax. If we reduce the rate of income tax, it does not mean that it becomes regressive. It just means that it is lowered, but it still goes in proportion or in progression, which means it increases progressively with the income or it increases proportionately with the income. So it cannot be regressive income tax. D, removing the tax-free allowance for income tax and extending sales tax to include all food. This is the correct option. For example, if we remove the tax-free allowance for income tax, it would mean that as income goes down, the tax proportion increases. And with sales tax, what happens is that when we increase the range of products that are taxed, it is a regressive because it will still occupy a very small proportion of a rich income and a large proportion of a poor's income. So it is a high burden on the poor and a small burden on the rich. So it's regressive in nature. As income increases, the burden reduces. The proportion of the tax reduces. So D, both of them are regressive in nature, both of these changes. So 14, D is the correct answer. 15, supply and demand functions for a product are quantity demanded. 1500 plus 50p, and quantity supplied is equal to 300p minus 2000, where p is equals to price. With government regulation, the current price in the market is $15. What can be concluded about the form of price regulation and the balance of demand and supply in the market? Now, to solve this question, we first have to put the demand and supply they have given into an equation to get the initial P, or the initial price. So quantity demanded 1500 plus 50p equals 300p minus 2000. So we will get the 2000 to the other side, which will become 1500 plus 2000, and 50p to the other side, which becomes 300p minus 50p. So 1500 plus 2000 becomes 3500, and 300p minus 50p is equals to 250p. Is multiplied here, and we divide it by 3500 on the other side of the equation. Now 250 is multiplied on the other side of the equation, and we divide it by 3500 like this. P equals 3500 divided by 250, which gives us the answer of 14. Now they've said that with government regulation, the current price in the market is 15, which means the government has increased the price, and it is generally a case with the minimum price like this. For example, if this is the equilibrium price, the government increases the price to impose a minimum price, a price floor, which is above the equilibrium price, and it is higher than the equilibrium price. In our case, 14 is the equilibrium price and 15 is the minimum price. And with minimum price, generally the supply is in excess of the demand, which results in an excess supply in the market. So now let's see the answers. A, it says effective maximum price, wrong. B, maximum price, wrong. C, effective minimum price, correct. And balance of demand and supply is excess demand. No, it is not excess demand, it is excess supply. Indeed, it says effective minimum price, which is correct, and excess supply. This is our correct answer. 16, it says to improve the air quality for its citizens, a government introduces a subsidy for the producers of cars powered by batteries charged from the electricity supply. What are the likely effects of this subsidy on the price and sales of electricity? Now, since the government has provided a subsidy to cars which is powered by electricity, so the demand for electricity will increase, which will result in higher sales for electricity, and that increased demand will obviously result in a rise in price. So the correct answer for this would be D, because both sales and the price of electricity are rising. So D is our correct option. 17, what is definitely not involved when a transfer payment is made? Transfer payment is payment for non-productive work. A, it says bank deposits involved, definitely. B, cash still involved. C, government definitely involved. D, production is not involved in this case because this payment is made for non-productive work, so D is the correct answer. 18, it says what is unlikely to occur with an increase in the provision of public goods. If the provision of public goods increase, what will be unlikely to occur? A, it says consumer non-excludability. It is most likely to occur. B, it says improved use of resources. We do not know. It depends on the scenario, but it is still likely to occur. C, it says opportunity cost. It is definitely going to occur. And D, it says reduction in tax. That is unlikely to occur because since the government increases the provision of public goods, she requires more funds, and for that she taxes more. Therefore, a reduction in taxes will be unlikely to occur, and D is our correct option. 19, it says in 2020 shops reported a fall in sales as domestic demand in an economy fell. However, the impact on the overall economy was not as unfavorable as was first feared. What might have lessened the impact on the economy? Now, the aggregate demand of a country is a combination of C, consumption, I, investment, G, government expenditure, X, uh, exports, and M, imports. If imports increase, there will be a fall in aggregate demand. And if all these other factors they increase, there will be an increase in aggregate demand. Now the options, they say that exports increased. This could be correct. B says imports increased. This is incorrect. C says savings increased. This is also incorrect because savings acts as a withdrawal from the circular flow of income, which will result in a decrease in consumption and investment, so it is incorrect. And D says taxes increased. This is also incorrect because increased taxes would mean that the aggregate demand in the economy will fall and the production in the economy will fall because there will be less incentive for producers to produce. So increased taxes will result in decreased aggregate demand. So it is also incorrect. A is our correct option for 19. 20, it says, what does a trade-weighted exchange rate attempt to take account of? A country's terms of trade, incorrect. B, international trade as a proportion of a country's national income, that is also incorrect. C says the relative value of international trade done with a country's trading partners. So in trade-weighted exchange rate, what we do is that we compare the relative values of our trade with different countries, and that helps in determining the trade-weighted exchange rate. So C is correct. And D, it says the size of a country's current account surplus or deficit, completely incorrect. So 20, C is the answer. 21 says what will lead to an improvement in the terms of trade? A, it says export prices fall by 10% and import prices fall by 5%. This will result in exports to become 90 in index and imports to become 95. When we multiply it by 100, the answer will be smaller than 100, which means there is a worsening or a fall in the terms of trade. B, it says export prices fall by 10% and import prices rise by 5%. This will definitely result in a fall because export prices are falling and import prices are rising. Definitely will result in a fall in the terms of trade. C, it says export prices rise by 5% and import prices rise by 10%. When we look at it, exports index will become 105 and imports index will become 110. When we multiply it by 100, the value will again be lesser than 100, so it will result in a fall in the terms of trade. Finally, D, it says export prices rise by 10% and import prices rise by 5%. This is correct because exports become 110, imports become 105, and when we multiply it by 100, our answer would be greater than 100 if you calculate it, so D is the correct option. 22, it says the diagram shows the annual inflation rate in an economy. So from 2012 to 2013, there is inflation because it is a positive rate of inflation, which means there's a positive change in the prices, which means a rise in the prices. And from 2013 to 2014, again, a positive change in prices, but it is a disinflation, which means the inflation rate is positive, but it has decreased, and that is disinflation. So from 2014 to 2015 and from 2015 to 2016, it is deflation because there is a negative inflation rate, which we call deflation. And from 2016 to 2018 onwards, again, there is positive rate of inflation, which is prices are rising. So what can be deduced from the graph? The price of goods and services fell between 2013 and 2014. This is incorrect because the graph is sloping downwards, but the prices still rose because the inflation rate was positive. And B says disinflation took place between 2014 and 2015. That is incorrect. Disinflation took place between 2013 and 2014. The purchasing power of money increased between 2014 and 2015. This is correct because deflation increases the purchasing power of money as opposed to inflation, which decreases the purchasing power of money. As we can see in here that from 2014 to 2015, percentage change in the price was negative, which means there was deflation and the purchasing power of money rose. So C is our correct answer to this one. And D says the cost of living fell from 2016 onwards. From 2016 to 2018 onwards, the price change or the rate of inflation became positive again, and this increases the cost of living. It does not decrease the cost of living. D is incorrect, and C is the correct answer to 22nd MCQ. 23, it says a country operates a fixed exchange rate system. What will put pressure on the country to devalue its currency? Generally, the fixed exchange rate system countries will devalue its currency when there is a current account deficit to recover that deficit by devaluing the currency, which means making exports cheaper so that their volume increases, their value increases, and making imports expensive so that their demand and volume in the domestic economy decreases, which results in their value to decrease, and which ultimately results in an improvement in the current account deficit. So a decrease in the country's inflation rate relative to the inflation rates of other countries. This is incorrect because why would a country make its exports expensive, which will result in cost of production to rise and the productive capacity of a country to fall? So this is incorrect. B, a decrease in the tariffs on its products imposed by other countries. Again, incorrect. C, an increase in its current account balance of payments deficit with other countries. Now, this is a reason that may put pressure on the country to devalue its currency, because a current account deficit can be detrimental to the growth of a country. So if that increases, the deficit increases in the current account balance of payments, the government will take action to devalue its currency if it is a fixed exchange rate system, and so C is our correct option. D says an increase in the country's interest rate relative to the interest rates of other countries. It is not the case with devaluation. So 23 has its answer C. 24, the table gives different combinations of possible values for a country's price elasticity of demand for exports and price elasticity of demand for its imports. Following the devaluation of the country's currency, under which combination of elasticities would the country's balance of payments on the current account worsen? According to the Marshall-Lerner condition, the price elasticity of demand for exports and price elasticity of demand for imports, if their sum, when we add them up, if that is greater than 1, then it will result in improving the balance of the current account balance of payments. But if it's smaller than 1, the sum, then it will worsen the current account deficit. A, it says 0.3 and 0.3. This could be the correct answer because this is the case in which the current account balance will worsen. Because in all other cases, as we can see, the sum of the PEDs is higher than 1 or greater than 1, which will improve the current account balance of payments. So A is the only option that will worsen the current account balance of payments. So yeah, A is our correct answer to 24. 25, it says a small country imposes no tariffs and has a perfectly elastic supply of smartphones from the rest of the world. Which statement is correct after the imposition of a tariff? The domestic demand for smartphones will rise. No. B, the domestic price of smartphones will rise. This is correct. C says the government will lose tax revenue. No, the government will gain tax revenue. The supply of imports will increase. No, the supply of imports will fall. So A, C, and D are completely incorrect. B is correct because the tariff will result in the domestic price of smartphones to rise. So 25's answer is B. 26, in a recent year, Japanese car manufacturer agreed to limit exports of cars to the USA. Now, if a country voluntarily agrees to limit exports to a country, it is called voluntary export restraint. So they ask, which form of protectionism is this? An embargo? Definitely not. Embargo is a complete ban on the imports. B, an export subsidy. An export subsidy is actually increasing the number of exports, not limiting it. C, a quota. A quota will limit the imports in a physical quantity. So a quota is a physical limit on imports to a country. It is not correct. D, voluntary export restraint. D is our correct option. 26. 27, it says the diagram shows a shift in a country's short-run aggregate supply curve from SRAS1 to SRAS2. The country imports oil. Why might an increase in the world price of oil have caused this shift? A says a rise in inflation is expected. If a rise in inflation is expected, aggregate demand would increase. The short-run aggregate supply will not shift inwards. B says consumers face a fall in their disposable income. If consumers face a fall in their disposable income, aggregate demand will fall. It will not affect the supply. C, domestic firms' costs have increased. Due to increased oil prices, the cost of production of domestic firms have increased, which has resulted in decreased production in the domestic market and thus caused the supply curve to shift inwards from SRAS1 to SRAS2. C is the correct answer to 27. D, the government reduces tax on oil and petroleum products. If the government reduces the tax, it will result in decreased cost of production, which will shift the supply curve outwards, which is not the case in here. So D is incorrect and C is the correct option for 27. 28, it says, what if decreased will help to reduce the rate of inflation? Budget deficit, if that has decreased, this means the government expenditure will fall, which will result in aggregate demand to fall, and then which will ultimately result in inflation to decrease. Direct taxes, they do not play such a role in reducing the rate of inflation, and tariffs, if they are decreased, the rate of inflation will fall to some extent, but not direct taxes. They do not play such a role in reducing the rate of inflation. C says exchange rate. If exchange rate is decreased, it means the imports will become expensive and cost push inflation will occur. It is not the answer. D, interest rate, if they are decreased, this means the cost of borrowing will fall and people will demand more loans and they will consume more, they'll invest more, which will result in increased rate of inflation. So A is our correct option for this one. 28, answer is A. 29. What is an example of contractionary fiscal policy? Contractionary fiscal policy aimed to decrease the aggregate demand within the country. So A, an increase in the budget deficit. If a budget deficit is increased, the aggregate demand increases, so it is not a contractionary fiscal policy. B, an increase in the budget surplus. If a budget surplus increases, it means the government has reduced its government expenditure and there will be a fall in the aggregate demand. So it is a contractionary fiscal policy. C is concerned with interest rate and money supply, which are not fiscal policies. Generally, they are monetary policies. So B is our correct answer to 29. 30 says a country with low unemployment and a managed floating exchange rate has a persistent current account deficit on its balance of payments. Which policy to reduce this deficit is most likely to keep unemployment low but cause inflation? So it will reduce the deficit and it will also lower the unemployment rate within the country, but it will cause inflation. Depreciating its currency, this would be correct because depreciating its currency would mean that exports would become cheaper, exports demand will increase, thus firms that produce goods for exports will employ more people, thus unemployment will decrease and the deficit will obviously recover if imports are decreasing and exports are increasing, but it will result in inflation because depreciating the currency will result in commodity prices and import prices to rise and result in cost push inflation. So A is our correct answer. B, it says higher direct taxation, which will not reduce the unemployment within the country because that is going to discourage producers and thus it is going to increase unemployment. C, higher import tariffs. It has no concern with unemployment because it affects the imports. It does not affect the domestic and the domestic firms, and thus domestic unemployment would not be affected enough. D, it says higher interest rates. Higher interest rates will recover the deficit. It will reduce the inflation also, but it will not cause the unemployment to lower. So both the unemployment factor and the inflation factor is wrong in the high interest rates one. So A is our correct option to 30. And that is all for today. Let me know in the comments if you have confusion with any question, and what paper do you want to do next. Let me know in the comments. And until then, take care. Goodbye.